I am a student of how the market moves and understanding it and being a part of it. It's a labor of love. It's a passion. It's not a desire for money. That's just the benefit. So that's what it is. It's this one right here, Constance Brown Composite Index and RSI average. So how we can figure out where to go when it's in this strong move down is we have to really look at our oscillators. Where is price pulling back to on the oscillator? What levels in the RSI is price coming back to? Let's zoom in here. Right, whenever price seems to go up and touch the 30, around the 40 area, that turns into the new overbought and it gets sold off. When it comes back up to touch it again, it gets sold off. Kind of moves back up a little bit over and gets sold off again. So, again, oscillators, they do not fluctuate just between 70 and 30. 70 and 30 on an RSI are just the default settings, all right? Overbought conditions and oversold conditions will change, especially when you're in a trend. You will find supportive RSI levels when prices are moving up. We can see that right here. This is something you don't read a lot about. Nobody will ever tell you, and really bad educators and people selling you trash will say that, oh, you just short whenever you get into overbought and buy whenever you get into oversold. You will always lose money. You will always lose money. I mean, it just does not work like that. When you're in a clear uptrend, and you can tell just by looking at it, you don't need a lot of past price action to determine if you're in an uptrend. You should just be able to see it. But when you start seeing and placing your own kind of support and resistance lines in the RSI, you can see where you can re-enter on a trend. Certainly, when you get into these elevated overbought areas, certainly you can take profit. Don't short, but take profit. And when it returns back to a supportive area in your oscillator, you can go back up. I mean, you can buy and ride it back up. Typically, in an uptrend, the RSI is going to find a supportive value between 50 and 60. And then when something's in a downtrend, you're going to find a resistance on anywhere between a negative 40 and 40 and 30. I meant 60. Sorry, 50 and 60, and then 40 and 30 are we going to find some resistance lines on a downtrend. Hope that makes sense. Additionally, another way that you could look at it is by, in a trend, you could maybe think of ignoring the RSI and only using the composite index. That makes it a little bit difficult. You'll miss more moves, but you'll just, sometimes it's a little easier for folks. But again, like the best option really is to just use the RSI in this kind of a trend, and then don't get into tunnel vision on your time, what time you're looking at it, your time frame, because when you zoom in, you want to look at where these levels are on longer time frames. Now, on the 8-hour, we're still moving down quite a bit. What are we looking at on the daily? Nice healthy move. Looks like we may keep moving down based on this. The weekly, though, on the euro, I've talked about that, is so, excuse me. Hide this here. On the weekly, we have divergence. We have very clear divergence in the RSI, but not so clear on the composite index. But yesterday I was talking about how this candlestick is a reversal candlestick, not just in its formation, but because it's a pivot candlestick now, because we have the in between candlestick of these two, when we have lower highs and lower lows compared to the center and middle candlestick, means that is a pivot area and that price will want to zoom down. These two peaks are very bearish. So, on a weekly time frame, not a healthy chart for continued upwards movement. Will we get pullbacks? Yeah. Will they last very long? No. Pullbacks we should look forward to, because if you did not get in short early, then you'll have another opportunity to later on. All right.